This program is a collaboration of personal opinions and individual free thought. It does not represent the views or narrative of the mainstream corporate media hacks. Viewer discretion is advised.
And here we go.
Live from the bell tower, taking a stand for your rights, your liberties, and all the bullshit in between. You're listening to Break the Bell Podcast.
Oh, it's that time of week again. It's Monday night. Welcome to the Break the Bell Podcast.
Hello, beautiful bell breakers. Did you run on your bank today?
I did not run on my bank today. I should have
either.
ran on my bank today because that seems to be the new fad is to run on the
Right?
banks. Like they always give the example of like It's a Wonderful Life.
Yes.
Like
That's what I always think of.
they always give that example, but
Yeah.
very little does that actually occur. But then like this weekend that actually occurred.
Yes.
It's just like I just picture guys in like trench coats and like mafia boss hats, like demanding their money and like throwing people. I don't know.
You think bank managers are like, oh, this is just like It's Wonderful Life. Hello, police?
yeah. That's exactly what they're saying, or more like, oh shit, what the hell just happened?
Yeah.
Like, if you don't know, we're here to cue you in on what happened over the weekend. The 16th largest bank in the U.S.
Yes.
became the second largest bank failure in
Yes.
in history.
Yes.
Well, like some side, it depends on who you're listening to. Some sides are like, oh, it's the largest bank crash since 2008, and it's like, well, there hasn't been that many since 2008 that we know of.
Right.
So I mean, is it really that big of a deal? It's like saying it's the
Yes.
largest shooting since the last shooting.
Yes.
But then when you hear it's the second largest bank failure in history,
Yes.
and then that was followed by the third largest bank failure in history when another bank failed the next day. So it's just like, but there's nothing to worry about. The bank,
Right.
the financial system is safe, right?
Well, and also the fact that the Silicon Valley Bank is also like one of the top bankers, like for startup and small businesses,
for like tech startups,
tech startups, healthcare startups, and
So it won't affect us by any
no.
stretch.
Well, 90% of their deposits are over $250,000.
Yeah, and we'll get
Yeah,
to
I know.
why that's
I just,
important.
Like, whoa, what?
But yeah, a lot of their deposits are really big because you get like investors into these companies that it's set up so investors can invest into these tech startups, and these tech startups need a place to call that money to call home. So here we have Silicon Valley Bank, which the name says it all. It's,
right. Tech stuff.
yeah. I mean, it's like, oh, I wonder what they've invested in.
Yeah, right.
Silicon Valley Bank. So, man, Silicon Valley Bank,
Yeah.
maybe invest in boob
I
jobs.
was
I
going
don't
to say
know.
that might be more accurate.
It might be a different story. Maybe that's the route they go next. So that's what we're going to be talking about. We're going to be talking about this like 48-hour like bank crash, like from like one of the number one. They were like listed like number one bank.
Like all the experts were like saying you got to invest in Silicon Valley Bank
Like
because
March
it's
1st
solid.
they were.
Yeah,
like March,
right.
like
Yeah.
less than 2
Yeah,
weeks
it's
ago
like,
they
this
were.
is hot. This is
and then
solid.
all of a sudden
Yep.
it's not hot anymore.
Yeah, it's like
We-
bail.
we can
bail.
See clearly how fragile the system is, and it's a system that is supposedly like fail-proof because of all the artificial like regulations and fail-safes that were put in place after 2008 to keep something like this from happening.
Yeah.
But clearly there's no such thing as a complete fail-safe because here we have Silicon Valley Bank.
Right.
And so we're going to talk about that. We're going to talk about the crash the lead up a little bit to the crash, like how that, like we're gonna talk in layman's terms because I don't do finances well. It
No
was
one
like,
gets more layman than us.
yeah, like when people are like, oh, well, let us put this in layman's term for you. No, it's more of let me attempt to explain this to you in my
Yes.
stupid brain,
Yeah.
and hopefully you can lower yourself to our layman's terms to understand what we're
Right,
saying.
yeah.
Because I mean, I was reading an article that's like, to put it in layman's terms, and I got through a paragraph. I was like, wow, that's fucking layman's terms.
Is there layman's? Layman's?
Yeah, can we narrow this down
Yeah.
a little bit more here? So we're gonna kind of explain as
Yeah.
best as we can what happened, how this bank crashed, why it crashed, and obviously I got some conspiracy
Oh, of course.
theories.
There's
to
lots
throw into
going on
there.
with
There-
this.
There is. There's a lot of stuff from like wokeism to
Yeah.
like to federal regulation to like
This is it. This is the Great Reset.
yeah, right. Yeah.
Yeah.
I mean, this could really go anywhere,
Yeah, it
and
could.
this is just like the kickoff point. So this could either like we're gonna watch this for the next couple days because
Mm-hmm.
it just happened. Today was the big day because
Yeah.
banks weren't open over the weekend, so it's like, all right, what the fuck's
Yeah.
gonna happen on Monday?
Mhm.
What's going to follow suit? What's going to crash in response to this once the market's open? And we still, I mean, it's still early to tell.
Right.
So,
We got a lot of people patting themselves on the back, and
Oh, yeah.
it's still early.
yeah, it's very freaking early. So, we go from bank being great to bank crashing to like the federal regulators taking completely over within like 2 days.
Yeah.
So, a lot can happen in a short amount of time. So we're gonna speculate a little
And
bit.
it always seems to happen over the weekend, doesn't
Yeah.
it?
Oh, obviously, because nobody's really paying
Paying
attention
attention,
that
right.
much to the news. Before we get into the show, we obviously got to mention check us out all over social media because we are all over social media. And what a better thing to do on social media than to check us out. You can find us at all the main platforms, the Facebooks, the Twitters, the Instagrams at Break the Bell Pod is our handle. Or you can find links to it at breakthebellpod.com. You can also find links to our amazing merchandise store, which we have shirts like the I Won't Eat Your Bug shirt, which is going to catch on.
It is. It is.
Like we came up with this shirt before eating bugs was cool,
Yeah.
and now people are like, "Did you guys hear we're gonna eat bugs? They're gonna make us eat bugs." Yeah, we got a
Yeah.
shirt that
Boom.
says it.
Check
Yeah,
it out.
we got the We Are Not Your Pawn shirt. We got some logo merch, some cups, some other stuff over there. So you can find links to that merch store as well as links to our social media at our website, breakthebellpod.com. Check it out. Buy our shit. Be cool like we try to be cool. That's about it for that.
Yes.
I just want to get right into the show because there's quite a few things to cover
Yeah.
here. I mean, we're kind of retarded, so it's probably going to take us a while to really even feel out what's going on and explain to ourselves what's going on. So let's just get right into the show. We're going to play this intro video for you, and when we come back, we're going to talk about the bank run on Silicon Valley Bank. We'll be right back.
What did you say?
You talking to me?
What the heck are you talking about?
What did you say?
What did you say?
What did you say?
Are you talking to me?
Are you talking to me? Are you talking to me?
What are you talking about? What are you talking about?
What are you saying?
What did you say?
Are you talking to me?
Well, maybe he was talking to me.
What'd you say?
Talk to me.
What in heaven's name are you talking about?
Talk to me, talk to me, talk to me, baby.
Did you just say?
What did you say?
You listen to me. Are you talking to me?
Are you talking to me?
What the hell are you talking about?
Who are you talking to?
All right, we're back. Derek Ambrose says, "Can't wait to see how many of my tax dollars this bank is going to cost me." Now, Derek, you should have already heard by now. Biden said this is going to cost the taxpayers $0, just like the Inflation Reduction Act that was like 10 trillion or whatever. I don't know, made up number, some made up number that was going to cost us no dollars.
Yes.
I mean, that's the new thing. It's like, don't worry, at zero cost to you,
Yeah.
it's just gonna cost the people that you like finance through or you buy through or who directly impact you, but it's not going to affect you
right.
at all because that's not.
That cost never gets passed down ever.
You've heard of trickle down economics, right? Like where the wealth is supposed to trickle down to us, like the tax breaks. What they don't understand is the opposite works, like the trickle down taxes, the trickle down costs, the trickle down debt. Like eventually we eat that cost.
Right.
And we
it's
eat
all
a lot of
connected.
that. Yeah, it's so we're not shielded from this as we find out. Whether or not we are directly taxed or whether or not the banks raise fees or the grocery stores raise prices. I just dropped my notebook. One way or another, we pay for it because the greedy bastards at the top aren't going to pay for it. That's how we got in this situation in the first place. But don't worry, Derek. Zero cost to you.
Right.
I mean, that means nothing these days. But so this weekend was kind of proof that literally anything can change overnight. Like literally overnight.
Yeah.
Like a sign of, like I said, a sign of how kind of artificially propped up and fragile our financial system is.
Right.
Like I get that an unartificially propped up financial system will go up and down naturally. And so you got all those downs and people worry about the downs. They like the ups, but it flows ups and downs.
Right. It corrects naturally.
Yeah, and people get all like their panties in a bunch. So they create these regulations that prop it up to keep it kind of flattened off, flatten the curve. You know how that, remember how flatten the curve worked
Absolutely.
for
Yes, it works great.
Yeah, and it's same is true with the financial system. If you can artificially inflate it to flatten that, what could possibly go wrong, right?
I mean, do you think Biden, after saying how strong our economy was, and he sees this, do you think he was like, oh shit, or he's like,
No, he just keeps on telling. They keep pumping lies to him, and he gets up behind the podium and is like, no, the financial system's great, just like our economy's great.
Yeah.
Just like unemployment's great, the jobs are great, everything's great, guys. Don't worry, I got this. I'm
Go
fucking
back to
Joe
sleep.
Biden.
Right.
I got this. Yeah, and then he goes back and takes a nap, like you said. But this weekend, like I said, we witnessed the largest bank failure since 2008, or for more perspective, like I said, the second largest in history of banks in the world, which is not that big a deal.
No, not at all.
I mean, how many things have you seen where they're just kind of downplaying this? So like, well, it wasn't a major bank, so you don't really got to worry about it because I mean, it's not like J.P. Morgan crashed.
Right,
It's not
right.
like, well, Chase is what other big banks are out there? Are they all one bank now? Wells Fargo.
Yeah,
It's
right.
not like
Wells
Wells
Fargo,
Fargo
US
crashed.
Bank.
U.S. Bank hasn't crashed yet, so we don't have anything to worry about. What they fail to remind you is that how the 2008 crisis started was a smaller bank failing that Bear. I can't remember the name of it. But Jeffrey Epstein worked for them.
Right.
Yeah, I don't know if you knew that.
Right.
But J.P. Morgan took over that,
Yes.
ate up their debt, and then realized, oh shit, there's a lot of debt here, and then J.P. Morgan had to get bailed out.
Yeah.
So yes, it might be a little bank, but things happen.
Yeah.
Like it snowballs,
Right.
and that's one of the main things I want to point out. Is things snowball really fucking quickly.
And that's one of the things, I don't know if you saw Janet Yellen talking on Face the Nation, but she kept talking about they just wanted to avoid a contagion, right?
Contagion, is that their new
That's
new thing
yes,
they're
that's the
calling it?
buzzword.
It's
Gotta avoid the
contagious.
contagion.
Bad banks is contagious. Don't rub up against
right.
the bad banks because your good bank will become a bad
Right.
bank.
Well,
'cause it's
basically like
contagious.
this widespread fear, like, oh shit, I better run on my bank because, that bank's failing, that type of thing.
Well, yeah, they want to avoid that. And by doing that, they just tell us everything's fine. Like, they're like, oh, it's fine. Don't worry about it. Don't run on your bank. It's fine. Usually when somebody gets up and says, nobody panic, what's the first thing? Like, if I was to tell you, like, if I was to say, like, don't look, just duck. What's the first thing you're gonna do?
You're gonna
be like, what?
Yeah,
It's
be like, what? What do you mean?
I said don't, and you get hit in the fucking face with whatever hit you. Yeah. As soon as somebody comes out and says, nobody panic, everything's fine. Like it's just like, well, I wasn't panicking, but should I be panicking? Well, what should I be? Oh, a bank crash. Well, what if my bank crash? And then there's the conspiracist in me believes that there's some intentionality in the way they like they don't want to portray that they're sparking fear, but they
Yeah.
at the same time are sparking fear.
Well, and you said it just right before we went on. It's like, okay, if they're telling you not to panic, then you should probably be worried. But if they tell you to panic, then it's best.
Yeah, if
then
they're
probably
telling
don't
you,
need
guys, this is the worst thing in financial
Yeah.
history, you should probably be thinking about
yeah, okay, what am I missing?
what are they distracting us from? But
Yeah.
if they come out and they're like, guys, everything's fine. It's fine. Everything's just fine. It's just like, what are you hiding from me? Because
Yeah.
clearly all they do is lie. So
Yeah.
everything's not fine. It is much less than fine, especially when you have a bank that, like I said, goes from like, it's specifically like a bank of a bunch of rich fucking people.
Right.
Like,
yeah, right.
not just a bunch of Joe Schmoes,
Yeah.
a bunch of rich dudes
Yeah.
have a bank that they get other rich dudes to pour money into, and that bank can go from, hey guys, this is the number one bank you should be investing into, oh, this
Yeah.
bank is no longer, it's just not here anymore,
Yeah.
and your money that was in it, it's gone.
Yeah.
Sorry, no money for you. And people are like, wait, there's no money? And then people around are like, well, if it can happen to that bank, what about
Right.
my bank? Maybe I
Yeah.
should go check on my bank.
Yeah,
Are
right.
the banks safe? And then, yeah, like I
a
said,
bank
snowball.
of rich people fails, but so you think a bank of normal people, right? You'd be like, oh shit.
So we got this Silicon Valley Bank. I want to look kind of at the timeline, the 48-hour timeline of how this transpired, I guess. So let me pull this screen up if I can. So this is from ABC 13 Eyewitness News. How does a bank collapse in 48 hours? A timeline of the Silicon Valley Bank fall. So before we really dig into this, I got to point out that, again, mention that there are supposedly fail-safes from this. And so you got to ask yourselves, what are the fail-safes protecting, if not the banks and the people with their money in the banks?
Right.
What are they protecting? And some people say that, like, well, Trump kind of undid some of the fail-safes in 2018, so it's Trump's fault that this
Right.
happened. So, I mean, there's a lot of
course.
finger-pointing in all of this. So let me pull this up. Says, this week, the go-to bank for U.S. tech startups came rapidly unglued, leaving its high-powered customers and investors in limbo. Silicon Valley Bank, facing a sudden bank run and capital crisis, collapsed Friday morning and was taken over by federal regulators. It was the largest failure of a U.S. bank since Washington Mutual in 2008. Here's what we know about the bank's downfall and what might come next. All right, so here's a little bit about the bank. What is SVB? Founded in 1983, SVB specializes in banking for tech startups. It provided financing for almost half of U.S. venture-backed technology and healthcare companies. While relatively unknown outside Silicon Valley, SVB was among the top 20 American commercial banks, with $209 billion in total assets at the end of last year. So
Jeez.
we just lost $209 billion just in 2 days. So that's very short answer there.
Yeah.
This whole thing's very short answer, so I'm going to explain a little bit further in detail as best as I can after we go through this and after my mouse dies. In short, so why did it fail? In short, SVB encountered a classic run on the bank. That's not how it starts. So
No, that's
well, depends on which direction, which angle we're going, because
Yeah.
it could start that way. If you have some, I don't know, rich douchebag that like has an agenda and it's like, everybody pull your money out of this bank, and everybody pulls their money, then yes, I guess it could start there.
Yes.
But it says the longer version is a bit more complicated. Several forces collided to take down the banker. First, there was the Federal Reserve, which began raising interest rates a year ago to tame inflation. The Fed moved aggressively, and higher borrowing costs sapped the momentum of tech stocks that had benefited SVB. Higher interest rates also eroded the value of long-term bonds that SVB and other banks gobbled up during the era of ultra-low, near-zero interest rates. SVB's $21 billion bond portfolio was wielding an average of 1.79 interest rates. The current 10-year Treasury yield is about 3.9%. At the same time, venture capital began drying up, forcing startups to draw down funds held by SVB. So the bank was sitting on a mountain of unrealized losses in bonds just as the pace of customer withdrawals was escalating. All right, so let's talk about these two things. So first of all, who is SVB? What do you know so far beyond what they just said? It's a startup bank.
Yeah, it's like you said, it's a major startup bank for tech. and health stuff. Small businesses, they bought up the little while the interest rates were low, but then they started selling right when the interest rates went up.
Yes,
And I think that's what the problem was.
that started a lot of it.
Yeah.
So Derek Ambrose says the whole thing kind of sounds like a crypto exchange that stole a bunch of money not long ago. I thought the same thing. I was
Yeah,
like,
that
this
was
is
my thought.
eerily familiar to the FTX.
That's
thing
what
that
I was
happened.
thinking exactly. FTX.
Okay, so SVB, to my what I can process in my brain, is they were a bank for companies that couldn't get big banks,
Right.
Because they're startups. They're
Yeah.
high risk because they're like brand new. They don't have a lot of credit.
Right.
They don't have a lot.
A lot of entrepreneurial people.
Yeah, well, they don't. Yeah, and they don't have a lot of like, I don't know, like, oh, what's the word? Don't they haven't had a lot of time to build up trust in like their company, their business.
Right.
It's brand new. It's like
Yeah.
you don't know if this is gonna fail or sink or if it's gonna be amazing. So comes along this bank, they're like, we'll invest in these startups. We'll be that person. And so what it was different from other banks because tons of money going in and out of this because again, tech industry. You get like angel investors that are investing in a tech startup, and the tech startup needs a home for it, like I said in the intro. So they place it in this bank. But with that kind of money, that kind of deposits going into banks, most banks, like if you're just like a bank for like a bunch of billionaire hedge funds, they put that money in the bank and it just sits there in the bank. There's not a lot of in out traffic. But when it comes to like a startup, that money is what they're using for their operations, and for their like development and stuff like that. So they take the money from the investors into the bank, and there's a lot of times a lot of that money goes right back out because it's not just money just sitting on money.
Right. It's liquid.
Yeah.
It's constantly flowing.
Yeah,
in
they're
and
paying
out.
off they're paying their employees. They're paying they're paying for everything.
Yeah.
So. That's kind of the difference when it comes to that's what made this kind of a really high risk scenario. You had a high risk company that you're investing in, and the fact is that money doesn't really sit there for super long amount of time and build a lot of interest.
And so, in effect, when you look at like say the 2008 crisis, right? They made a lot of really bad like subprime mortgage deals.
Yes, and this was like kind of. I wouldn't say it was necessarily subprime. It wasn't like. But yeah, it'd be like investing in a lot of new home buyers.
Right. Yeah.
Like, well, I don't know if you're a good investor or a bad investor or a bad like house payer because homeowner because nobody's ever invested. But I want to invest in you. Yeah. And
when you consider the last couple years of our country, it hasn't been real good for business owners.
Right. So there's probably a lot of need for like lending and borrowing and stuff. So have this bank, and what this bank would do, how banks work is they take your money and they loan it out for other things. They buy stocks, they buy like bonds, they invest in other things. So they're paying you like 1.5% interest, but they're making like 3.5% interest on bonds or something like that, whatever it is. So they're making money off of your money while it sits in the bank. Again, the problem is a lot of times with these investors or these startups is they need to pull that money quickly because they need to use it. So this bank ended up buying a bunch of like bonds when the interest rates were like next to nothing.
Yeah.
And I don't know how this whole shit goes. I was not good at finance, or accounting. Accounting was the bane of my existence. But they bought a bunch of bonds. And then the feds decided to hike the interest rates, which in turn made the bonds worth less. So when they went to sell the bonds, they got less than what they owed on it. So they had to sell these. So two things happened. The feds raised interest, and like it says, the money coming in like from investors to these tech startups was kind of dwindling. So the tech startups were having to pull more of their money out. And as they were pulling more of their money out, the bank was like, oh, shit, we don't have the money to pay for this, so we're going to have to sell off some of our bonds. Well, they had to sell off their bonds at a loss because the interest rates were hiked. And so people got word of this, and they're like, there's a problem here. They announced, they're like, we sold, your flag just fell. We sold a bunch of bonds for a loss, and people are like, oh shit, what's wrong with this bank?
Right. Yeah.
And then people started saying, we got to pull our more money out of this
Was
bank.
that something that they like just announced, or was it leaked? Was it like a whistleblower came out and be like, hey, look, this is what's happening?
From everything I've read, it was announced by them,
Okay.
and it's like, I don't know, maybe they're
So it wasn't like an
required
FTX
to.
thing where it just like came out in an article.
Yeah, it's all, I'm not sure how it came out, but it said they announced it. I don't know if they're required to like announce to their stockholders or something. That's probably was announced to stockholders is what I would assume, because they're like, guys, we're not getting all the dividends that we thought back because we had to sell at a loss, and the stockholders are like, fuck this. So, long story short, the public got wind of it. The people with money in the banks got wind of it, and they're like, pull your money now. This bank's going to fail. And the bank ultimately was trying to sell. I think to J.P. Morgan had offered to buy it. And then people got wind that they were trying to sell, and they're like, this bank's in trouble. Pull your money. And it just started crashing, and J.P. Morgan's like, nope, not touching it. And then
Oh, I had heard that. So there was a separate, like, so you have the Silicon Valley Bank, but then you also have like Silicon Valley Investors.
Yeah, which was like the
yeah,
parent
and they were
company.
trying to get them to buy it, and
But they didn't already own it? I don't
no,
understand
they're
that.
like two separate like factions,
Huh.
and so one was kind of the like overseer, but didn't really have like their hands on it.
So it's kind of set up like FTX, sort of, kind of.
Yeah, it's exactly.
Their money's just flowing around, and when's that going to come out? That we were just robbing SVB to pay SVI,
Right.
to pay off their debt,
Yeah.
and it was
Exactly.
like FTX. I mean, that hasn't come out yet. Again,
No.
this story came out like yesterday.
No, right,
to public. So I mean, this is all new.
Yeah.
So it says SVB encountered a classic run on the bank. I read this stuff. It says higher interest rates eroded the value of long-term bonds. So that's where it says their bond portfolio was yielding 1.79% when the current treasury yield is 3.9. So that's why they got a freaking loss on their bonds. It says the panic takes root. On Wednesday, SVB announced it sold a bunch of securities at a loss and would also sell $2.25 billion in new shares to shore up its balance sheet. That triggered a panic among key venture capital firms who reportedly advised companies to withdraw their money from the bank. The bank's stock began plummeting Thursday morning, and by the afternoon it was dragging other banks' shares down with it as investors began to fear a repeat of the 2007-2008 financial crisis. By Friday morning, trading in SVB shares was halted and had abandoned efforts to quickly raise capital or find a buyer. California regulators intervened, shutting down the bank and placing it in receivership under the FDIC, the Federal Deposit Insurance Corporation. Now, FDIC insures banks. It insures your money in the bank. And this was another problem. And this was, and we'll get into this. Another issue with FDIC is that let's scroll down because they cover a lot, or they don't cover a lot. They hide a lot in this article.
Right. And something that you didn't mention, which I had brought up right as we were going on, is that the CFO and CEO, Greg Becker and Daniel Beck, had sold off $3.6 billion in stocks.
Of their own stock?
Of their own stock 2 weeks before this happened.
So, and that makes me ask the question, which I was going to ask anyway. It's like, you can't not know this is going to happen.
Yeah.
Like we said 2 weeks ago, they were saying this bank is great. This bank is phenomenal.
I mean,
the best bank to invest in.
2 days before the CNBC guy was going crazy about how great this bank is and how everybody should invest.
So these guys have to be sitting back because it's not like the Fed's just hiked interest rates.
Yeah, they've been going up steadily for the last year.
Yeah, and it's not like the tech industry was starting to dry up on funds and they were having to pull. Like, this has been happening. So, they're sitting there like, oh, this ain't good. You know what that was when the CNBC guy came out and said that? Was hopefully to boost people to gain confidence and be like, let's go buy stock in this or invest in this bank. When they know, obviously they know that something else is going on, that we got to do something quick. Let's tip off the CNBC guy to hopefully get something quick moving.
Yeah, right.
At the end of the day, it didn't work, clearly. So, I want to read what they have to say about the FDIC because they don't disclose a lot in this article. This article is very vague, and it kind of irritates me, and that's why I stuck with it, because of how vague it is. It says, despite initial panic, this talks about the contagion fears like you were talking. Despite initial panic on Wall Street, analysts said SVB's collapse is unlikely to set off the kind of domino effect that gripped the banking industry during the financial crisis. Now, realize this article was written like Saturday.
Right.
So before the markets even open, so they have no idea what's going to happen once the markets actually open. The system is as well capitalized and liquid as it has ever been, Moody's chief economist Mark Zandi said. The banks that are now in trouble are much too small to be a meaningful threat to the broader system. Might be his famous last words.
Yeah, right.
Might be. I'm just speculating, but that might be his famous last words. Oh, it's much too small to be anything.
It won't affect anything.
It's kind of like Chernobyl.
Yeah, right.
It's a minor thing. We don't really have to worry about this. No later than Monday morning, all insured. So this is the article talking, not the guy. So this is the article kind of
glossing things over,
regurgitating what they're telling him. No later than Monday morning, all insured depositors will have full access to their insured deposits, according to the FDIC. It will pay insured depositors an advance dividend within the next week. So, all insured, so don't worry, all insured depositors that are insured by the FDIC will receive their money. That's what that says, right?
Sure, right.
No, it says they'll have access to their insured deposits.
Right, they're insured.
They're insured
That's
deposits.
keyword.
The FDIC only insures $250,000 per deposit.
Yeah.
And again, we're talking like
startup companies.
Startup companies with millions of dollars coming in, billions.
You know who one of those companies are, which I have not divulged.
Who's that?
Roblox.
Really?
Yes.
I did not know that.
Yes.
Well, shit, that sucks for Roblox. For Roblox fans
and my
out there.
daughter, who loves Roblox.
So you're talking 93%, I think is what they said, of the money in that bank was uninsured.
Yes, that's insane.
93%
Of how much was it again? It was like was it 209 billion or 20
hundreds of billions, yeah.
Yeah.
Let me see if I can find. It was like 209 billion, yeah.
Yeah.
So 93%, $209
insane.
billion is not insured by your federal DIC, your federal TIC. So when they come out and they're like, don't worry, no later than Monday, you'll get your insured deposits back. Everybody's like, oh, that's great. We'll get our deposits back. No, you'll get your insured deposits back. You won't get most of your money back, according to this. And this was Saturday.
Yeah.
Unless something drastic happens. So it says, what's next? So while a broader contagion is unlikely, smaller banks that are disproportionately tied to cash-strapped industries like tech and crypto may be in for a rough ride, according to Ed Moya, senior market analyst at Oanda. Everyone on Wall Street knew that the Fed's rate hike campaign would eventually break something, and right now that is taking down small banks. So it's pretty much like, fuck them. We knew it was going to happen.
All right.
Fuck them.
Yeah.
Somebody had to break. Thank God it wasn't the big banks. It was just the small banks.
Right.
The FDIC typically sells a failed bank assets to other banks, using the proceeds to pay depositors whose funds weren't insured. A buyer could still emerge for SVP, though it is far from guaranteed. From my understanding, thanks to the 2008 crisis, there are no buyers.
Yes.
There's nobody wants to touch this because they're like, we don't want to take that on and be the next JP Morgan.
Yeah.
We don't want the government to take over us because we bought up a shitty bank.
I know that they were trying to talk to somebody was trying to talk Elon Musk into buying it. And I think he was like, well, I'll look into it.
Why? Why would he think that was a good idea? It's like, this would be a fucking fantastic idea.
Maybe he just thought after Twitter this would be the next big step.
I mean, he does kind of loosely have connections to that bank because we'll get into the guy. One of the guys that was the first to pull money out and spark this mass chaos was one of his co-founders at PayPal. So he does kind of have some connections here. I don't think he was directly connected to the bank, but his co-founder definitely was, and definitely played a big role in the contagion that they're talking about, which I love that they're using the term contagion here. So what do you think? How do you feel for those tech investors, first of all?
I mean, I'm sure they're panicking. I mean, they probably just bought on to everybody else. It's like, hey, yeah, this is the bank to go to if you want to do your startup, right?
Yeah, it's kind of like the cash advance place up the road.
Yeah.
It's like you need money.
Right, yeah.
Just go up to Cash America
Yeah.
and you'll get money. They're just giving money to everybody.
What's
no
interesting to
strings
me
attached.
is that this bank, who bought up, bought up these like treasury bonds and these mortgage things.
Mm-hmm.
Now they're saying like the guy who did it used to work for Lehman Brothers.
Really?
Yes,
I did.
and I don't know if that's accurate or not. And so they're like, okay, the guy is 0 for 2 now.
Why would they hire that guy? First of all,
Yeah, right.
like it's
Well,
like,
you know how they're all connected. I mean, they're all in bed together.
well, yeah, but it's like, hey, I failed here.
Yeah.
I'd be great over here.
Right.
I've learned from my mistakes, and let me come work for your bank. It'll be
Yeah,
great.
right.
I know exactly how not to do it.
Yeah,
so
right.
you should hire me.
But so instead of buying subprime mortgage, let's buy a bunch of treasury bonds. We can't lose.
Now, how does something like this happen post 2008?
I've always thought that the regulations that they impose, they're just loose, right? It's just like it's pillow talk, right? It's like, hey, baby, we got this. Don't worry, it's safe.
Well, I think, well, it's, yeah, first of all, it's to make everybody feel okay
Yeah.
with spending the however many billions that we spent to bail out these banks that were too big to fail.
Right.
But now we'll get into it more, but I think a lot of those protections are more for the banks that are too big to
Well,
fail and less for the
and
less than banks.
and they were more for houses and mortgages, right? When I bought my house this last summer, I had to deal with some of this shit because I had to explain how basically every little cent above $50 got into my bank account, so that they couldn't make a subprime mortgage. I had to have paperwork for everything that was in my bank account and every
That's some
transaction over $50. Yeah, I know. It's like, where'd this $50 come from? Oh, it was a gift for a birthday, and so it was just ridiculous.
I don't know if there's money in my account. I don't know where
Yeah.
it came from.
So-
I don't know.
so
It's
they
probably
watched-
not mine.
They watch that as a hawk, but they don't watch this.
Well, the thing is, it's so freaking weird that they would be like, well, this whole housing market, the whole mortgage system was such a wreck. But it's just like, well, can't you apply that to all banking in general?
Right.
Isn't the
Yeah.
same kind of practices practiced across all sort of investment banking?
Yeah,
You would
think,
think,
so.
but
yes.
yeah, like you were saying, it's like, well, we'll protect the mortgage banks, but let's just leave this loose over here. Let's
Yeah,
just see
right.
what happens.
Yeah.
You remember how much money we got to spend when this happened, so
Yeah.
we don't want to close all
Yeah.
the doors for all this federal mismanagement of money because that would be just crazy.
Yeah, and Derek said that he did work for him 30 years ago, so it was
For Lehman?
yeah.
Okay. Good to know.
Yeah.
Good to know we got some of the same players still in the game.
Right.
So, obviously, all weekend they tell us, don't worry, like everything's fine, and everything's gonna be okay. The banks, markets are gonna go open back up. You all are gonna see that everything's going to be okay. Now, I saw several articles like why this isn't 2008 or why this isn't why the banking system is safe because
So
even,
trying to
even
kind of
though
massage you.
yeah, even though this happened,
Yeah.
why, like so many articles like that. This one is from Fortune, so obviously they don't want you to panic. Why the banking system is safe despite the second biggest bank failure in U.S. history, according to Financial Professor. That's a long title. This came out on Saturday, too. It goes into all the details of how and why it collapsed. And asks, are deposits now safe? From a practical perspective, the FDIC is now running the bank. It's typical for the FDIC to shut a bank down on Friday and have the bank reopen the following Monday. In this case, the FDIC has already announced that the bank will reopen March 13th as the Deposit Insurance National Bank of Santa Clara. So it's now it's now under the reign of the FDIC.
Gotcha.
At the end of 2022, SVB had $175 billion in deposits. It's not clear how much the deposits remain with the bank and how much of those are insured and 100% safe. Well, we do know that only about 7% of them are insured and safe. For depositors with $250,000 or less in cash at SVP, the FDIC said customers will have access to all their money. How many of those do you think that actually is, though?
Right.
For those with uninsured deposits, Basically, anything above the limit of $250,000, they may or may not receive back the rest of their money. These depositors will be given a receiver's certificate by the FDIC for the uninsured amount.
An IOU.
Yes, that's what it sounds. It's like, here, somebody owes you this money. It's not us.
Yeah, right.
It's not the bank because they don't exist anymore, but somebody owes you this money. The FDIC has already said it will pay some of the uninsured deposits by next week, with additional payments possible as the regulator liquidates SVB's assets. But if SVB's investments have to be sold at a significant loss, uninsured depositors may not get any additional payment. So basically, if they don't get any money for what they sell, then you don't get anything back.
I mean, how would you feel if you had just started up a business like 2 years ago and you got $5 million in there, right?
Yeah.
And then the bank closes down and they're like, well, we can give you $250,000 of this. Okay, well, that won't cover payroll for the next.
Well, that's the big thing is like a lot of these startups are wondering how they're going to cover payroll. I keep dropping my fucking notebook and it's pissing me off. They don't know how they're going to cover their payroll for next week, let alone like to carry on as a company.
Right.
It says, is there any risk that more banks might fail? At the end of 2022, SVB was the 16th largest bank in the United States. That sounds like a lot, and it is. But that's just 0.91 of all. So that's $209 billion. Being number 16, it's only 0.91% of all banking assets in the United States. How does that make you feel that less than 1% is in the 16th largest bank?
Yeah, that's insane. I mean,
talk about maybe consolidation of wealth.
Yeah.
When over 99% is within the top 15 banks, which means probably over 50% is within the top 3 banks, would be my guess.
Right.
I mean, that's kind of bullshit. But then we'll get more into consolidation of wealth, because I feel like that's where a lot of this is heading. Because who's going to buy up, or not even if like JP Morgan doesn't buy SVB, because they don't want a repeat of 2008.
Right. Yeah.
Where do those customers go?
Right.
They're not going to go to another risky bank. No. They're going to be like, well, what we got to do is we got to go to somebody that's less risky.
Right.
And
one of the top 3.
Yeah. Try JP Morgan or U.S. Bank or Wells Fargo. And so all that money that was in that small bank is now probably going to merge over to JP Morgan without JP Morgan having to buy the risky bank.
Yeah.
It says, having said that, so it says there's little risk that SVB's failure will spill over to other banks. Glad they're saying that Saturday because Sunday was a different story. Having said that, SVB's collapse does highlight the risk that many banks have in their investment portfolios. If interest rates continue to rise and the Federal Reserve has indicated that they will, the value of investment portfolios of banks across the U.S. will continue to go down.
I mean, doesn't that seem rather short-sighted? I mean, if you're in a bank and you know finances, unlike myself, and you see the low interest rates but know that we're in inflation, wouldn't you automatically assume that, they're going to jack that shit up?
No, because the fucking president came out for a year and was like, there is no inflation. There's nothing to worry about. So they're like, oh, there's nothing to worry about. Just keep dumping money into this. And they're like, they're probably buying treasury bonds that are like, they're like, no, don't worry about that. Keep buying our debt from us. Right. And then they raise debt on the interest rates on their debt. And they're like, fuck you. We now own your bank. Yeah. I mean, it's quite the scheme, isn't it?
It is quite the scheme.
It's like, just tell them, like, let's keep them flatlined. Well, they'll buy off all our debt. And then when they fail, we now own that bank because they can't pay us back on our debt.
Genius.
It's kind of genius. It says, while those losses are just on paper, meaning they're not realized until the assets are sold, they still can increase a bank's overall risk. How much the risk will go up will vary from bank to bank. The good news, guys, is that most banks currently have enough capital to absorb these losses. By most banks, they mean the top 15 banks, because clearly number 16
couldn't do
it. So most banks, being the top 15, currently have enough capital to absorb the losses, however large, in part because of efforts taken by the Fed after the 2008 financial crisis to ensure financial firms can weather any storm. So rest easy for now. The banking system is sound. You feel at ease now? You feel like everything kind of makes me glad I don't have a lot of money.
Right? Yeah, exactly.
Because first of all, can you imagine if you, like, say you weren't somebody that's just like scraping to make it next week,
Yeah, right.
as most of us are.
Right.
But like you know what you're in for. Like, you know,
Mhm.
it's just like, if I don't have money next week, it's gonna suck.
Right.
So I'm just gonna work for money next week.
Yeah.
Now imagine you're a guy that's like put his entire life into saving $1 million, $10 million, $1 billion, and then all of a sudden overnight it's just like gone. It's just like, well, fuck, I'm one of those guys now.
Right.
It's just like everything you did.
Yeah.
Like part of me like wants to invest more in my retirement, but there's a large part of me, especially at days like today, that are like, it's not going to be there anyway, so why put any effort into that?
Yeah, right. Seriously.
Because those guys are the ones having heart attacks and going and jumping out of buildings
Yeah, right.
because
They just
their
lost
pension plan.
everything.
Yes, they
Yeah.
lost everything they worked for. So rest easy. For now, the banking system is sound. Do you feel like that's true? You feel like everything's good?
I
Don't worry,
feel
everything's
like
found.
everything's on a fucking house of cards right now.
Yeah. What happens ideally when the public finds that banks are failing? They
I mean,
start losing trust in.
Well, yeah, they start stacking their money in their mattress.
It's a
right?
giant. Well, yeah, it's a giant snowball
Yeah.
effect. Like, starts with one, then another one happens, and then another one happens because they're like, well, this bank's a lot like that bank. Maybe we shouldn't invest in this bank either. So they start pulling their money, and then bigger banks they're like, well, I don't know if these banks are any. Well, let's say a bigger bank's like, well, maybe we should buy that bank, and then those people are like, well, they're going to invest in that that risky bank. Maybe we should pull our. It's a fucking giant snowball, and that's just how the stock market works. That's how banking system works. That's how all this BS financial system works. It's like it's based on the public perception that everything is fine, and when the public perceives that things aren't fine anymore, then they start pulling money out and start moving money around. It's all just a perceptive thing.
It is.
Like
It is.
the stock market's only good if people think that it's good.
Absolutely.
And then they start investing in that. They start buying those products. It's like, well, this is good. Let's buy. If anybody gets wind that something's not right, that's when things start dumping. That's why FTX failed. That's why this Silicon Valley Bank failed. That's why the freaking stock markets crash. That's why, because people lose trust in it and stop buying.
And isn't that all cryptocurrencies?
Yeah.
I mean,
well, that's
so-
all any investment, really. If everybody starts pulling out of any investment, it doesn't matter. Like, say Starbucks is doing fucking phenomenal.
Yeah.
Like say they're like tripling their amount of stores every single year, and they're what's it called? They're I don't know. When you make money, what's that called?
Their profit?
The profit. Their profit levels each year is doubling every single year.
Right.
They're doing freaking phenomenal. But then somebody really high priority comes out, like say Elon Musk or something like that. It's like, Starbucks is doing shit. You shouldn't invest in that. And then people are like, oh, we should really start to be concerned about Starbucks. It doesn't matter how profitable it was. If people start pulling out their money, they perceive that this company sucks. They start pulling out their money. That company sucks.
Right. Absolutely.
It's all a perceptive game, and it is. It's so artificial. It's crazy.
Yeah.
It's crazy that just people's perceptives can be more damaging or more like beneficial to a company than their sales or the product that they're selling.
Absolutely.
Yeah. And that's a problem with like corporatism.
Yes. No, I agree.
So let's take a look at just how fine the banks have been doing since this initial one. Well, before that one, even there was another bank that was crashing on Thursday, and it was this crypto bank called Silvergate. They announced Thursday that they were liquidating amid sector turmoil. And this is another one that's like they had to know this was coming because their claim is that this was following the collapse of FTX because it's a crypto bank. They're like, well, FTX did this to us. It was like, that was 6 months ago.
Yeah, right.
And you're just now deciding,
you can figure out things by then.
Right. Says the California-based bank warned last week it had less than well capitalized after depositors demanded their money back. You don't want, that's not sound Again, back to our perception, customer perception or
Yeah.
investor perception. You probably shouldn't come out and be like, we're less than well capitalized. We're not doing good,
Yeah.
guys.
We're going down fast.
The ship is sinking. Get off. Adding that it was evaluating its stability to operate as a going concern. Silvergate said a voluntary liquidation of the bank was the best path forward in light of recent industry and regulatory developments. And we haven't even really looked into the regulations that came post FTX on the crypto world. So that'd be worth looking into.
Yeah, definitely.
Says the failure of FTX sparked renewed volatility in the crypto markets. Silvergate also revealed it was being investigated by the U.S. Department of Justice.
Obviously, they did not take a class on customer service and promotions.
So we've got. Oh, this is all spark. You remember FTX? That was bad, and this is the reason why. And by the way, and we're being investigated by the Department of Justice. Like, you could have probably led with that because
Right.
that seems probably more damning.
But we have a $50 referral program if you bring a friend.
Derek Ambrose says, glad to know if my bank fails, I'll get the $400 that's in the bank from the FDIC. Maybe.
Yeah, right.
Eventually. I mean, it's over 300. It'll get taxed though. The tax man will come after you because you have more than the $350 that they said they would investigate. So that's this crypto bank on Thursday, and then at the same time, the Silicon Valley Bank crashed, and then I think it was Saturday or Sunday.
Sunday, I think.
Signature Bank became the third largest crash in U.S. history.
Yes, and I've never even heard of Signature Bank.
I never heard of Silicon Valley Bank.
No, me neither.
But
That's true.
So you go from everything's fine, the economy's great, to now we have the second and the third largest
in one
bank
weekend.
failures within 2 days of each other. We have 2 and 3.
But don't panic.
Don't panic. At least it's not as bad as number 1.
Right,
It could be so much worse. It could be number 1. Now, collectively, if you put them together, does it equal number 1, though?
I would think the math evens that.
Maybe. Says why regulators seized Signature Bank in the third biggest bank failure in U.S. history. Says on Friday, Signature Bank customers spooked by the sudden collapse of Silicon Valley Bank withdrew more than $10 billion in deposits, a board member told CNBC. The run on deposits quickly led to the third largest bank failure in U.S. history. Regulators announced late Sunday that Signature was being taken over to protect its depositors and the stability of the U.S. financial system. Now, wait. I thought these banks were too small to affect the stability of the U.S. financial system.
Yeah.
Now, SVB, which was bigger, which was you said $209 billion?
Yes.
That was too small of a bank to affect the U.S. financial system. And now that leads to the crash of this $10 billion one.
Mm-hmm.
But now all of a sudden regulators are like, oh, we gotta do something about this to protect the stability of the financial system.
What is the connection between Silicon Valley and Signature? Why would Signature be affected by?
Oh, I think the customers are just like, oh, it's another bank. We got to pull our stuff. Says the sudden move shocked executives at Signature Bank, a New York-based institution with deep ties to real estate and legal industries, said board member from U.S. Representative Barney Frank.
He's still around?
I don't know who he is. Signature had 40 branches, assets of $110 billion, and deposits of $88.5 billion at the end of 2022.
I believe he was the head of FEMA back in 2008.
No.
Yes.
No.
Yes.
Look, Barney Frank, no.
I'm pretty sure.
No. We had no indication of problems until we got a deposit run Friday, which was really contagion from SVB, Frank told CNBC. No. Frank, I do know who he is because it says later. He was one of the ones. He was the Frank in the Frank Dodd.
Yes.
Dodd-Frank
served as chairman of the Financial Service Committee from 2007 to 2011 and was a leading co-sponsor of the 2010 Dodd-Frank Act.
Yeah, I was going to say he was. So he is talking like he was part of this, but he was part of the Frank Dodd Act, which was the 2008 regulations.
Yes,
after.
and I, based on what I had seen, I thought he was partially responsible for some of this.
Probably.
From the 2008
Most
crash,
likely.
Sorry.
It says problems for U.S. banks with exposure to the frothiest asset classes.
Frothiest?
Frothiest.
I thought I was the only one that used that word.
Exposure to the frothiest asset classes of the COVID pandemic, crypto and tech startups boiled over last week with the wind down of crypto-centric Silvergate Bank. While that firm's demise had been long expected, it helped ignite a panic about banks with high levels of uninsured deposits. Venture capital investors and founders drained the Silicon Valley Bank accounts Thursday, leading to its seizure by midday Friday. That led to pressure on Signature, First Republic, and other names late last week on fears that uninsured deposits could be locked up or lose value, either of which could be fatal to startups. Signature was founded in 2001 as a more business-friendly alternative to banks. It expanded to the West Coast and then opened itself to the crypto industry in 2018, which helped turbocharge deposit growth in recent years. The bank created a 24/7 payment network of crypto clients and had 16.5 billion deposits from digital asset-related customers. So a lot of the money comes from crypto, too. As waves of concern spread last week, Signature customers moved deposits to bigger banks, including JP Morgan Chase and Citigroup, Frank said. Exactly what I said. It would do. It's like they don't have to buy up the banks because these people are going to move all their money into the big banks. What are you going to say?
Yeah, it was Frank that was partially responsible for pushing the banks into the subprime mortgage.
So how was he in part of this whole regulatory thing?
Well,
like how do you take a guy?
He broke it, and they decided that
like,
he was
we're
going
gonna
to fix it.
You know how to break it, so obviously you can help us fix it. Right.
Yeah.
That makes sense.
He pushed it. He blamed Bush for everything.
According to Frank, Signature executives explored avenues to shore up the situation, including finding more capital and gouging interest from potential acquirers. The deposit exodus had slowed by Sunday, he said, and executives believed they had stabilized the situation. Instead, Signature's top managers have been summarily removed, and the bank was shuttered Sunday. Regulators are now conducting a sales process for the bank while guaranteeing that customers will have access to deposit services will continue uninterrupted. So apparently they will still be able to somehow access their deposits. Now, is that all their deposits or just the $250,000?
My guess would be up to the $250,000.
Says the move raised eyebrows among observers. In the same Sunday announcements that identified SVB and Signature Bank as risks to financial stability, regulators announced new facilities to shore up confidence in the country's other banks. So get that. Just like overnight, our federal government's like, we came up with a solution.
Yeah, right?
Kind of like when vaccines just kind of are popped up and they're like, oh, we can make a vaccine for this. It usually takes us 20 years, but this one only took us 6 months. That's fine. We haven't been working on this forever.
Not at all.
We haven't been planning for this.
Yeah, right.
Or maybe I don't know. It says another bank that had been under pressure in recent days, First Republic, declared it had more than $70 billion in untapped funding from the Federal Reserve and JP Morgan Chase. For this part, Frank, who helped draft the landmark Dodd-Frank Act after the 2008 financial crisis, said there was no real objective reason that Signature had to be seized. I think part of what happened, now this is interesting that Frank would say this.
Yes.
He's like, well, we don't even know why. They have this untapped $70 billion. Why did we seize this? Because he says, I think part of what happened was that regulators wanted to send a very strong anti-crypto message. We became the poster boy because there was no insolvency based on the fundamentals. And that's Frank. So he must have an active role in this bank because he said we.
Yeah.
So he is now once again part of a failed excursion of banks, just like the guy from Lehman Brothers. It's like all these people are interconnected, and somehow everything they touch, they move on and touch it, and it turns cancerous too.
Yeah. Well, and it's interesting that it's the same names over and over again and everything.
Yeah, it's like, well, like in these banks, we'll find out because we're gonna get into the response from Yellen and the president. Like, we're just gonna instantly fire the people at the top because obviously they can't run. It's like, but you're seeing these same fucking names. So you think Frank's gonna go away? You think Lehman Brothers? No, they're gonna take whoever the CEO was and fire him, even though it was probably Frank whispering in his ear, "Hey, you should try this."
Yeah, right.
Trust me on this one.
I don't know what he was thinking.
So what span of a weekend we had 3 banks fail, but
Yeah.
no reason to worry here, right?
Right.
Nothing to see here. No.
Yeah,
Just-
we're keeping the contagion at bay, people. I mean, 3
Right.
banks, that's not contagion. That's like an accident.
Yeah, but we got to start taking on some regulatory procedures
Right.
just in case it affects the financial system,
Right.
but it's not going to affect because
Right.
these are too small.
Yeah.
They're too they can fail. They're not the
Right.
too big to
That's
fail.
why we're seizing them.
Yes. And probably merging them with the too big to fail banks
Yeah.
because they're too big to fail. If you do that, then the entire financial system's too big to fail, so it'll never fail. That's how it works, right?
Exactly.
Now we
All the
made it
time.
all too big to fail. Nothing will fail. So, I don't know. We got to get into break pretty soon.
Yeah.
Thoughts so far? Because we haven't got into the Fed response.
It's all very coincidental, don't you think? I
Mm.
mean, it's just very bizarre the way it all transpired.
Yeah, just how it went from everything's great to nothing's great.
I mean, we knew it was.
It's like some companies will come out one day and be like, got a major liquidity problem. No, they're going to say up until the end, until it's too late, that everything's fine. I work at a company that they make wrapper, like flexible packaging, came from like the salad,
Oh.
you know, like the plastic salad pack.
Yeah.
They made wrappers for, and one of our 6% client, like they're from, which will track here.
Yes.
And so Dole like had to stop doing a lot of work, and so they severed the contract with us. And we saw it coming, and we all knew that this stuff was happening, and they brought us all in a meeting like, guys, everything's fine. There's not going to be layoffs. We have no reason to worry because we're pulling in these other customers to like we're kind of to like diversifying, so we're not solely like dependent on one customer.
Yeah.
And within 2 days, 50% of the plant got laid off
No shit.
after they just told us nothing to worry about. Everything
Wow.
was fine. That's how companies are. Like
Yeah.
they don't want to come in and say, guys, we're gonna probably be doing this because everybody's gonna probably start looking
They'll
for
leave and then shit.
writing something.
Yeah.
So yeah, it's not to for the company week before saying we're the best bank in the world. That's not a conspiracy. I mean, that's shitty though.
Yeah.
That's shitty when it comes to like your people's livelihoods, and not just the investors, your investors' clients, and or your clients' clients, and like the medical system that is like supposedly this is investing into, and startups. Like you're throwing around lives. It's hard.
When I had seen about the execs selling off stock for Silicon Valley, I'd seen there's already been a filed against them. And so any who's bought stock from June 2021 to now are considered like a defendant or a plaintiff in the case. My thought is, okay, so who pays that out?
Right. Well,
Right?
we're going to get into what the government is off of this money.
Yes, and
it's not the taxpayer. Remember,
right?
Zero of financial burden to this because our government is amazing.
Yes, they think this stuff through.
We're gonna get into break, and then when we get back, I want to talk about the Fed response. I want to talk specifically, like Janet Yellen addressed it, Joe Biden got to go of him, and then I want to talk a little bit about kind of the conspiracy around this that I thought some of the
There's a
speculation.
couple of good ones.
Yeah.
I love the Janet Yellen response because I was watching her talk and like, fine, let me hear. Nothing she said was clear.
Yeah.
She was like all over the place. And I'm like,
yeah,
which part was transparent?
It's the politician in her speaking. We're going to take a quick break. We're going to take 3 or 4 minutes to continue to
I'm
know what's going on. Hopefully that clears up by the time we get back. We will be right back. And we're back, and I have no idea why our internet connection is so shitty right now. Things are going really slow. And Bill is listening to us. Having network problems or computer problems or a combination of the two. So hopefully you can hang in there and bear with us because we're trying. We're trying our hardest. We can only try as hard as technology will allow us to try. Maybe our company is one of those startups funded by
I can see
SVB.
that. Only Iowa tech company.
Like super froze.
Yeah.
You're just froze.
I'm just froze. Yes.
And I'm like, how? Well, you kind of. I don't know if I can. Or something. Stand by. Try to fix this.
Okay.
To try to break, but coffee was more important.
Yeah, that's perfect.
All right, give us just a minute. And I think we're back. And you're echoing.
How's that?
How's that? That's better. We seem to be not as frozen now. So
Okay.
hopefully
deal.
this thing holds up. Hey, we got more viewers than we did before we left. So maybe we need to leave and come back more often. You guys just like to watch us walk away.
They really do.
So we are back. We had some technical difficulties. Our shit was just freezing up left and right. So I had to restart this stream. Or not the stream, but we had to jump out and jump back in. Fortunately, we can do that. We used to be when remember we'd get kicked off the stream, we'd have to start a whole new stream, and then it's just like everybody's just like, where's everything at? And they just like disappeared.
Yeah.
Fortunately, this program I have now lets us jump out and jump back in, so that's a plus. Let's see if we can watch Joe Biden's response too, because we're talking about if you missed the first half, we're talking about the SVB, the Silicon Valley Bank, and the bank the old-fashioned bank run is what they're calling it, like where people are just like scared their money's going to be frozen, so they just all went and pulled their money, and then just everybody who didn't get there in time, their money got frozen instead.
They're screwed.
Derek says, unplug it and plug it back in. That's basically exactly what we did, except the not the computer itself. But anyways, I said I wanted to get into some of the federal response to this because obviously they're going to say, just let it go and just let.
Right.
banks that fail are going to fail, so just let it be
Right.
and let the markets decide, and that's just what happens, right?
Right. Which would be great if this was an actual free market.
right. Well, that's the whole point. Is they wouldn't say they're not going to say that. They're not going to say, "Oh, just let it be. We'll just see how this thing plays out." No, it's like, "Oh, we got to touch it because everything we touch obviously is success. So we got to touch this."
We
And
need the federal government involved.
They got to come in and save the day. So here's Joe Biden talking. This is about 4 minutes long. We won't watch the whole thing, but I just want to watch part of it because the most of it is him like patting himself on the back. So here we go.
Before I leave for California, I want to briefly speak about what's happening in Silicon Valley Bank and Signature Bank. Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their
Sign
bills.
language lady's
Are
killing
you
me.
laughing at the sign language lady?
She is really over enunciating.
She's got way more emotion in this than Joe Biden ever
She
does.
Maybe she's trying to compensate for him.
Well, I mean, if you were saying it the way Joe Biden's saying it, it'd just be like
Yeah, that's true. She was like
drooling on yourself while barely moving your
she
hands.
looks like she's on crack.
And watching her, it's like that. There's no way that guy's saying all that.
Yeah,
stuff.
right.
And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured, rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers.
What do you think of that statement alone? No losses will be borne by the taxpayers.
Yeah, sounds great.
It sounds good on paper.
Yeah, right.
Just like this whole banking system is great on paper.
It's always great on paper.
No losses will be borne by the taxpayers.
Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund. Because of the actions that our regulators have already taken.
So are they going to increase fees from the other banks? You can't hear a word he's saying. 'Cause you're watching
I can't, absolutely. No, they're
So are they increasing the fees of the banks? Because wouldn't the banks just increase our fees then to compensate for it? Because the banks got to make money.
Well, yeah.
They're in the business of making money. That's why they're banks. They're bankers.
Right.
You remember when bankers used to be considered like the
respectable?
lowest? No, like shitty.
Yes.
Like shitty
Oh, yeah.
bankers.
It's like
kind of like tax collectors and
Yes.
bankers
Yes. That's what it's getting back to.
Yeah.
So because you're right. They're not going to use taxes to take our money and put it on there. It's going to be so much worse.
Yeah, absolutely. Listen to what else is going to cover this.
Every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore.
And we'll put one of the guys from the Lehman Brothers, or the Fannie Mae or Freddie Mac.
Right. We'll put Barney Frank in charge of it because he did so good the last time.
Yep.
Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works.
Now, you want to talk about how capitalism works, Joe?
Right.
Capitalism works without
government
propping up a fucking bank that fails. So let's talk about how capitalism works. First of all, I do understand if you invest in a company, the way capitalism works, if that company fails, yes, you should not be protected. But he's almost like saying this like the investors were the problem. It's like, well, it's your fault for. It's almost like coming down on the investors the way he said it. It's like, no, you're not going to get your money. Yeah. Why would you think you'd get your money? But
it's just like them blaming the greed of the corporations on inflation.
Now, imagine this, though. People find out, oh, the banks that typically have been like kind of propped up artificially by the government for how many decades now, oh, they're not going to protect us as investors if the bank fails. Well, maybe I don't want to invest in a risky bank anymore. So maybe I'm going to stop investing in a risky. So not only are they causing panic of the people who are putting money in the banks, but they're also causing a little bit of distrust in the people that are investing in the banks. So those people stop investing in the banks. How many banks are going to fail because investors start pulling out now?
Well, but they can't make it look like it's a problem with the system.
Well, no,
the system has to be bad actors.
Bad actors. The system's perfect. It's set up perfect, and that's why we can protect you against the bad actors who happen to be these greedy investors in the bank, obviously, and the management of the bank. Has nothing to do with all the way the financial system is set up. It's the managers and the investors of the bank because they made these poor decisions.
And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law.
What did he
finally,
just say?
We must reduce the risks of this happening again. During the Obama-Biden administration, we put in place tough requirements.
Now here comes the pats on the back. The whole rest of this is him patting himself on the back.
Requirements on banks like Silicon Valley Bank and Signature Bank, including the Dodd-Frank law to make sure that the crisis we saw in 2008 would not happen again. Unfortunately, the last administration rolled back some of these requirements. I'm going to ask Congress and the banking regulators to strengthen the rules for banks to make it less likely this kind of bank failure would happen again, and to protect American jobs and small businesses. Look, the bottom line is this. Americans can rest assured that our banking system is safe. Your deposits are safe. Let me also assure you we will not stop at this. We'll do whatever is needed. On top of all this, let's also take a look at a moment to put the situation in a broader context. We've made strong economic progress in the past 2 years. We've created more than 12 million new jobs.
There it is.
More jobs in 2 years than any president has ever created in a single 4-year term.
You recover
jobs. 4% for 14 straight months. Take-home pay for workers is going up, especially for lower and middle-income workers.
What does this have to do with what's going on right now?
Yeah.
It's like, well, yeah, the banking system is shit, but remember, I brought back jobs, and I brought back an unemployment flow.
The economy is sound.
The economy is sound, which means the financial system must be sound. Frozen again. Why are we frozen again?
On drugs.
You do. Okay, you probably on drugs. That's just your natural look. It's fine.
Yes.
It makes me think of this image here, if it will pull up. Everything's fine. This is fine.
I love it.
As the world burns around us, everything's fine. That is Joe Biden giving his speech about banks, about the economy, about the low or the high income, the low unemployment, everything. It's just the world's burning around him, but this is fine. Let's pat ourselves on the back here because everything is fine. Do you think everything's fine though? Does everything seem fine to you?
No, and the more he says it, the more I believe that they're not.
Yeah, the more he says it's fine, the more I think something is
even
seriously
worse. It's
messed
even
up.
worse.
Something is really wrong. Now, Janet Yellen came out and basically regurgitated the exact same things that Biden was saying. So it says Silicon Valley Bank collapses. The Treasury, Fed, and FDIC announced steps to ensure deposits will be paid in full. That God, we keep freezing up. Something is amok here. The Federal Reserve, Treasury Department, and FDIC announced Sunday they will make additional funding available to ensure all Silicon Valley Bank deposits, both insured and uninsured, will be paid in full. Now, I disagree with that.
Yeah.
Because, look, if my car's not insured and I get a wreck, is the government going to come in and pay off my car? Because
fuck no.
No. It's like, I'm sorry, your bank didn't or couldn't or whatever insure a certain amount of funds. Who does that? Like now you're not saying that the FDIC only covers up to $250,000. Now you're saying the FDIC covers everything as long as we deem it okay.
Well, as long as the federal government has taken it over and seized
it. Yeah, exactly.
Yeah.
And so then what happens when the Federal Reserve takes over and takes control? Then what? They sell it off to J.P. Morgan or some bank that's ultimately owned by the government now because they were taken over by the government back in 2008.
Yeah.
So, I mean, all this is just kind of massively consolidating the wealth, first of all.
Absolutely. Yes.
And it's making money for the government because the government's going to be like, hey, we're going to take this over and we're going to pay off your debts. But then at the end of the day, we're going to sell it to like J.P. Morgan. And obviously, we're just going to pay off all the debts with that.
Right.
No, they're going to make their money off of it.
Absolutely.
If not, just take over 100% control of the banking
yeah.
system.
Right, exactly. And that's the thing. If they're not making money off it, they're sure as hell upping their regulations and the control they're going to have over the industry.
Yeah, that's a big part of it. There's three parts of this.
Mm-hmm.
There's the snowball effect, which they can say all day long. Nothing's like our financial system's fine as another bank collapses. Oh, don't worry, it's just a small bank. Not everything's fine. And then a big bank collapses. And they're like, oh, it's fine. It's just like we have the regulations in place to handle specific situations until it's like too fucking late. And then they're like, guys, this is a big freaking deal. And then the next part that comes out of this is federal regulation, which they tighten up restrictions on banks. They make it harder for small banks.
Yeah.
Because at the end of the day, it's kind of like the shutdowns. Like, who did they affect? They didn't affect Walmart and Amazon. They affected the little guy, and then Walmart and Amazon came in and bought up all the assets.
But look at with the after the Dodd-Frank Act, right, 2008. Like I was talking about, when I wanted to buy a house, they went in and they dissected every transaction over $50 in my account.
Right.
Now they're going to expand that to small businesses and banks, and they're going to be doing that for everything over, say, like, I don't know, $250,000.
Right.
And they're going to chop it up, and they're going to look at everything from small businesses.
Well, you can't actually put money into that because we don't approve of that kind of.
And
like, you can't borrow money for this because that's risky to us.
Well, where did this $5,000 come from, right? Or where did this $3,000? You know, and they're going to just chop it up, and they're going to over diagnose everything in the banking and in small businesses now.
Says after receiving recommendation from the boards of the FDIC and Federal Reserve, the consulting with the president, Secretary Janet Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank, Santa Clara, California, in a manner that fully protects all depositors. They said in a joint statement, depositors will have access to all their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayers. Again, that is bullshit. The Fed also announced it will make additional funding available to eligible depository institutions to help assure banks have the ability to meet the needs of the depositors. Silicon Valley Bank, the 16th, we talked about all of this. How they failed and stuff. It says the trio also announced Sunday a similar systemic risk exception for New York-based Signature Bank, which was closed today by its state chartering authority, according to the joint statement. All depositors of the institution will be made whole, as with the resolution of Silicon Valley Bank. No losses will be borne by the taxpayers, once again. Shareholders and certain unsecured debt holders will not be protected. So right back to it. Like Joe Biden said only exactly what Janet Yellen and the Fed said. He was just regurgitating that, and then he patted himself on the back, and then he's like, thank you. Everything's fine. President Joe Biden issued a statement Sunday on his administration's action to protect depositors at both banks, expressing his approval for the actions, but stressing he will hold those responsible for this mess accountable. Then they go on and on to say that this is not a bailout. It says senior Treasury official and Federal Reserve officials on calls with reporters Sunday night insisted these moves to pay deposits at Silicon Valley are not a bailout. So even though like a bunch of people were calling for bailouts, which is a terrible idea, this is not a bailout, but the banks are going to be fine. Everything is fine. But are the banks really going to be fine?
Right, and they came out. They're very explicit on the fact that due to the changes we made in 2008, no, we will not be bailing anything out.
But they are kind of repurposing FDIC grant. Like
Right.
now, the fee. It's hard to say they're not bailing out, but say we're giving more than what you're insured for.
Right.
But it's coming out off of all the banks' backs, not the federal government's back. Like what are they going to just start dipping into all the banks to pay off this one?
Well,
That's still a bailout. It's just the taxpayers aren't paying it. It's the bankers, all the other banks,
which
are
we
bailing
talked
them out.
about earlier, because that's the term I've heard popping up lately is the bail-in,
Mhm.
right? And that's where they're going with this.
Yeah, it's like, oh, all you guys, you need to hold each other accountable. So one person's screw up is all of our screw ups.
Right.
So we're going to punish you all for their screw up.
So you all need to prop this up now.
Yeah,
and
no,
take care of
the
it.
government doesn't need to.
Yeah.
You guys need to. But what we're not telling you is on the backside, we're going to give you guys money.
Right.
And that's probably how this works.
Right,
Like we're going to give you all these federal grants and funding to assist with this. But you guys, it's the banks that are going to be responsible. But don't worry, we're going to give you money for this. So at the end of the day, it's a fucking bailout, just worded
and like you said, again, that's something that's going to trickle down to us, the normal bankers, people.
Derek
thinking
Ambrose
people.
says, looks like a lot of internet service providers are having some kind of issue, so it's not just an issue with your stream. Look, we always have internet issues, so it's
That's
nothing unusual. It's more so tonight, but I don't know. Maybe this has something to do with it. Maybe the tech companies are being affected.
Yes.
Maybe they couldn't pay their internet bill at the internet company. So, anyways, like we were saying, it's going to turn back to the same thing.
Yeah.
Like the government's going to somehow funnel some money around, because it's not like the FDIC just has extra money to throw at it.
Right.
So they're going to have to take it from banks, and the banks are going to be like, well, this is bullshit. Why don't worry, we got your backs.
Right.
Vote for me. Vote blue and whatever.
Right.
So at the end of the day, as Joe Biden says, everything is fine. This is fine.
It's all fine.
Well, banking is fine. The banking system is fine.
Sure.
But the banks are not so fine. Like the small banks specifically are not fine. Like they're really glossing over how some of the small banks are crashing. And I got this this article from Zero Hedge that talks about other banks that they're not even telling us about are having issues. And I don't want to read this whole article because I want to get into the juicy conspiracy stuff, because it says First Republic Bank halted for volatility, down 65%. 65% is a lot.
Well, and First Republic Bank is the one that they said had 70 billion in surplus from the
from JP Morgan or something and the Feds.
And so they weren't sure why that was even an issue.
PacWest halted for volatility, dropped 41% to lowest on record. Regions halted for volatility after pairing 31% dropped to 20%. Western Alliance sinks to a record 76%, halted for volatility. So we got several banks out there that they're not even talking about.
But nothing, no worries.
Yeah,
guys.
all these small banks are being affected by this. But the banking system is fine. Why is the banking system fine? Because there's not the bailouts. There's not the pushing big banks to buy these out. They're just letting them go by the wayside so that the people put their money into the bigger banks that were already bailed out, that the government already controls.
Right.
So they are still accumulating all the deposits without having to buy up the debt from the bank. Because this says it would be the savings and loan 2.0 crisis, but we regret to inform you that there is no savings. Meanwhile, all hail JP Morgan, JP Mega, which is about to have some $18 trillion in deposits coming its way. Because once those small banks close, they're going to go to the big banks, primarily like JP Morgan. So you're talking not just a little bit, you're talking like trillions of dollars in deposits being pulled from these small banks and being deposited into these bigger banks. It's fucking consolidation of wealth. It's like Amazon during the shutdown all over again.
Yeah.
It's like, well, these small banks can't cut it, so bring your money over here. We can stay open. We're what was the term they called like Walmart?
Oh,
to keep them open.
it was the essential.
Essential, yeah, they were essential
Yeah, yeah.
business, but the
So,
mom and pop shops.
But
weren't.
along with that, it means that it's less banks for the IRS to comb through, right? Less banks for the federal government to have to check out and make sure the transactions are on the up and up. If they only have to focus on a narrow amount of banks, right?
Well, yeah, less to regulate.
Right, exactly.
Well, again, we're putting all these too small to not fail banks into all these too big to fail banks. So if they're too big to fail, then nothing's going to fail because they're too big to fail. And that's the logic of the United States federal government. It's like, well, if they're in a too big to fail bank, then they're not going to fail.
It has nothing to do with all your eggs in one basket, right?
Derek says, funny thing is U.S. Bank, Wells Fargo, and Bank of America, and Fidelity, major financial institutions are also reporting problems. No, Derek, no. The banking system is fine. It's fine. It's not affecting the financial system. Everything is fine. Stop with your conspiracy bullshit. It's nonsense. I have no answers for. I have nothing to say to that because the financial system's fine. Stop causing panic. You want to get into conspiracies?
Yeah, let's. Is there a chance that we wake up tomorrow morning and the Fed owns all the banks?
There's a chance that anything could happen in 48 hours. So, I mean, look what could happen in 48 small hours. Let's talk about, we got about 20, 30 minutes left. So I want to talk about the conspiracies of this because I want to do it before the internet takes us down.
Sure.
So, Avi, you said a bunch of conspiracies were running amok about this. What are some of the ones you heard?
From the total conversion to a new monetary system to the beginnings of the Great Reset.
Yeah, how so?
Just that, they're going to have to basically flip the financial system on its end. It's going to be a major transition of wealth or transfer of wealth, and that basically they're going to be converting everything more to a digital managed system that the government can kind of, and that way it's like, okay, well, Silicon Valley, you can't pay that out, but digitally we can transfer this money over to you so that you can pay out what you need to, right?
And we can make ones and zeros to support that,
and
everything will be fine. It's all fake anyway, so might as well make it more fake and
it's
more
all about
controllable
perception.
fake. Yes, it's all perception. That's all any of this is. It's made up stuff. So one of the conspiracies I had heard, and I think most likely a lot of this does have to do with consolidation of the wealth, consolidation of the banking system to one financial system.
I think so too.
That, at the end of the day, I think, but some of these conspiracy theories are pretty interesting. This one I found really interesting. I haven't seen a lot of talk about it, but apparently Silicon Valley Bank is one that is named by some of the financial institutions that were funding Jeffrey Epstein.
Oh,
so this was just a Twitter post or just a screenshot of a Twitter post. So I don't even have the whole post, but it's all speculative. So I mean, we can just talk about it. It says they named 6 more banks. This obviously isn't the beginning of the paragraph, but it says they named 6 more banks at the end of the article, leaving one of the 10 unnamed. Those are Fidelity Investments, Charles Schwab, Bank Leumi, Wells Fargo, Northern Trust, and Silicon Valley Bank. Says, is Silicon Valley Bank connected to any of the Silicon Valley oligarchs who helped the Dems? It's more than just the Dems, guys.
Yeah,
it's not the Dems.
It's both sides.
It's not the Clintons. It's not Donald Trump. It's not Nancy
Bushes.
Pelosi.
It might be.
It's all the above.
Yeah.
It's all of it combined. So if you end it with the oligarchs that help the Dems, you suddenly lost a lot of credibility to me just because it's more than just that.
Yeah.
But it is interesting to me that this may or may not be connected to the Jeffrey Epstein stuff. Very interesting. It says other banks and brokerage firms that were issued subpoenas according to court records include Fidelity, Charles Schwab, the ones I just named, and specifically Silicon Valley. Spokesperson for Fidelity, Charles Schwab, and Leumi did not respond for comment. Wells Fargo declined to comment. Silicon Valley Bank declined to comment on pending litigation, but a spokesperson said, to the best of our knowledge, Silicon Valley Bank has not and currently does not have any business dealings with the individual or entities named in the subpoena. So that's pretty speculative to me.
Right.
Now, what's more interesting to me is this next thing here that is connected to Jeffrey Epstein. It is the sole fact that J.P. Morgan executive was found to have some kind of like really strong friendship with Jeffrey Epstein. And this is an unredacted lawsuit that says Jeffrey Epstein, a former top J.P. Morgan executive, had a profound friendship and shared Snow White coded emails. I don't know what that means, but it's probably gross. It says, while convicted sex offender Jeffrey Epstein was on work release in Palm Beach, a federal lawsuit claims his private banker at J.P. Morgan, Jess Staley, kept in contact, visiting his Palm Beach mansion and his Virgin Islands private island many times, even while Epstein was jailed. So this comes out recently. When did this article come out? A couple weeks ago, I think. February 17th, so a few weeks ago. Saying that this guy that's heavily tied to J.P. Morgan also is heavily tied with Jeffrey Epstein. Now, what would be a better way to convince people to not pull money from J.P. Morgan because of all these allegations and get the public perception off of J.P. Morgan than to have these small, like more risky banks crash and then be like, oh, we need to go Jeffrey Epstein to J.P. Morgan. Like, we need to move our stuff to this bank. Like, maybe they saw it coming. They're like, we don't want our stock to crash. Let's get something in the works to make all these other banks crash. So instead of our stock dipping, our investments take a giant major hike. I mean, I see more to that than to, well, there might or might not be connections between the Silicon Valley Bank and Jeffrey Epstein. I see more to J.P. Morgan is taking a hit from this, and they're like, let's just kill off all these other banks and get a lot of people, like build a lot of people's more it's like, now I know you guys suspect that we had connections to Jeffrey Epstein, but where do you want your money? Do you want it with us, or do you want it with these banks that are crashing?
Yeah.
So I could see more credibility to that.
Yeah, definitely.
So what do you think? Do you think that could have something to do with this?
That's a good possibility. I guess my question would be like, because I definitely feel like the government is involved in this.
How so?
Well, I just feel like just the way that they're jumping in and seizing these banks.
Yeah.
So unless that there's favors in J.P. Morgan they're trying to repay by shifting things over, I don't know.
There's something going on here.
Yeah.
I don't know if it has anything. I think a lot of people try to tie everything to Jeffrey Epstein.
Yes.
I think it's less. I
That's
think
the
it's
romantic
all,
in us.
Well, but it's all a big vicious cycle. So there's some connection to Jeffrey Epstein, whether that's the culprit or not, or just some kind of.
I mean, we know how involved he was financially with a bunch of the big wigs and the different banks. So I mean, that wouldn't surprise me at all.
Right. Now, this next theory is perpetuated by the Republicans. So
Of course.
it's. I mean, there's definitely some possibilities here, but they are blaming Silicon Valley's woke politics for its collapse.
I don't think that's it.
I mean, there's probably some substance to this,
That's
but
possible.
I don't think that's the sole cause of this.
Yeah.
I think conservatives are trying to throw whatever they can at this and blame it's Obama's fault or it's woke politics.
Yeah.
It's obviously Project 1619 Project's fault.
Yeah.
It's everything that we
never let a
disagree.
good crisis go to waste.
It's the migrant problem fault.
Right. Yeah.
It says conservatives are blasting their new boogeyman of wokeism for the second largest bank collapse in U.S. history, eschewing the more straightforward story of problematic balance sheets in favor of raw politics. That's what politicians do. They politic. Senator Josh Hawley complained that Silicon Valley Bank executives were spending their time on funding woke garbage like climate solutions rather than actual banking. Now, we've talked about this, like how corporations are spending more time on the woke agendas rather than the making money part. And we've said this is eventually going to come around and bite them in the ass because people are investing more in the wokeness of a company than they are investing in a company. And at some point, people are going to realize this is a garbage company selling garbage, but we're only doing it because they support the environment or they support
Well,
equity or
and
something.
that was before I came. I was watching coming from this direction, Tucker Carlson talking about it, and he was talking about how on their website they talk about how their goal is to be like carbon footprint free, and how they were a big supporter of Latinx business owners, and how they were like putting a lot of money into like minority business owners trying to fluff up.
Yeah, and that's what
that
they're
industry.
getting into here. There says Representative Jim Comer, head of the House Oversight and Reform Committee, blasted Democrat inflation and called Silicon Valley Bank one of the most woke banks in their quest for the ESG. You remember we talked about ESG, the environmental, social governance type of investing. So he told them that they're spending more of their investing and policies on ESG type investments rather than good banking strategies. Says this could be a trend and there are consequences for bad Democrat policy, and I think we need to keep an eye on all banking system right now. So again, Democrats are calling for regulation, Republicans are calling for regulation. It's just all who can regulate the hardest, who can regulate so much harder than the others. Buy much into this?
I mean, there's some credibility there, I guess. If you look
could
at
be a symptom, maybe?
Yeah, it could be a symptom, but again, it comes back to wanting the control and regulations, like we were talking about.
Yeah, and everything comes down to how can we control this even more?
Yes.
Now, the most interesting. This is more of my conspiracy than anybody. Nobody else is saying a whole lot about it.
Yeah, but you piqued my interest with it.
Yes, one of the primary people to instigate the bank run was a man that we have talked about before on it. It was like the big tech. It was big tech.
It was like being
intelligence community love affair. Is what it was called. The episode was called. How they're in bed with the big tech companies getting in bed with like the intelligence community, and how a lot of the. Like Google Maps came from like CIA spyware, spying stuff. Facebook had connections to the CIA. And then there comes this guy, which we briefly talked about in the first half, is Peter Thiel. He is, again, he was like a co-founder of PayPal.
Yeah.
He was the one that we talked about, like was one of the first public investors in Facebook.
Yes.
And then he invested heavily in data mining and stuff. And then he went in to form that Palantir, which we found out in that episode was like so much worse than Facebook.
Yeah.
It was like the CIA and Facebook and the NSA all lumped in one.
He was a big proponent of being able to like spy on people through that.
Like his software, like he sells to like mega corporations and it's super spy on software, data mining software, and they want to like be able to predict your actions and stuff like that. And who knows how far he's got, but he was
very much Big Brother.
He was the first one that was like, everybody, there's a problem here, pull your stuff out. Now, on top of Palantir, he also, remember, he has a firm that invests in startups, in tech startups. So a lot of the startups that were banking through SVB were actually funded by Peter Thiel. So Peter Thiel has a lot of say in where these people put their money and stuff. So he is heavily, almost as influential over this as government regulations.
Does he do like one of those brokerages, right, where they basically, if someone comes to him because they want a loan on their business, and so he goes out and he like finds somebody to loan them the money, like he'll be like, oh, well, I got Silicon, but they'll loan you this money for 3% interest.
Yeah.
And so I'm going to put you over here with them, right?
Yeah, he's probably a middleman type guy. It says tech mogul, this from the Washington Examiner. This is titled Peter Thiel's Role Scrutinized as Spark of the Bank Run. Tech mogul and Republican campaign donor. I didn't realize that.
That doesn't surprise me.
Peter Thiel is being accused of sparking the run on the bank that forced regulations to close down Silicon Valley Bank. Journalists and critics have turned their focus on Thiel in wake of SVB's collapse, accusing him of influencing businesses to withdraw their funding from the bank. Now, this is kind of similar to Elon Musk saying, you know, I'm kind of thinking about going out and buying Bitcoin. And everybody goes, or Dogecoin. And everybody's like, oh, let's go buy Dogecoin. And then he makes bank when it like booms, and then he sells his Dogecoin. He's like, I'm just kidding. And then everybody goes and sells it, and it tanks. I mean, that's the kind of influence he has on like a bank like this or anything he touches. Says, to be clear, SVB did not properly hedge its risks against two threats. One was the rising interest rates, which we talked about, and the other was concentration of influence by Peter Thiel. So those two things, rising influence and concentration of influence by Peter Thiel specifically. Tweeted investigative journalist Dave Troy. That was mismanagement, but it wasn't fraud, and they still have sufficient assets to meet nearly all of the bank's obligations. Clearly, they do not.
Yes.
There should be more scrutiny on Peter Thiel and Bill Ackman for yelling fire in a crowded theater in this SVB collapse. I don't remember who Bill Ackman was, but I feel like we talked about. He's like a billionaire hedge funder guy. But he was in all this too. He was calling for the government to come bail this out, like hardcore. He was calling for bailouts, and that got people to like start dumping their shit too. So between these two people, specifically Peter Thiel, though, was specifically going to the people he was investing in and being like, pull your money now. Pull it. Put it in a different bank. Says others turned their focus to Thiel's promotion and subsequent profiting off crypto investments after the market crashed as a reason to be suspicious of his withdrawal. So he was kind of like Elon Musk with crypto, too. He promoted it, and then he
dumped it,
made his money, and then he dumped it. You mean the guy who was touting crypto and trashing critics while he was selling crypto? That guy? Shocker. Thiel's venture capital firm, Founders Fund, so this is the investor fund that he owns. Founders Fund pulled all of its funding from SVB as of Thursday morning. So he was early in the game. He's like, and that's why you think something shady's going on. Like he pulled all this shit out. Like he was one of the first, and he got all his money out. And then he tells everybody, pull your money, and they start pulling, and then they find out we can't pull our money because it's not there because I took it all.
Yeah.
The company also advised its portfolio companies to withdraw.
Does it say when he pulled that money out?
Thursday.
Oh,
the first day.
Gotcha.
First day that they were showing signs of weakness. The company also advised portfolio companies to withdraw their money from the bank, saying there was no downside to moving their money out of the bank. The time has led some to conclude the investors' actions may have led to the mass withdrawals. You can't say they may have led when he is specifically telling them, pull your money out.
Right.
Just do it. There's nothing's going to happen if you pull your money out.
It's really messed up because it's like he saw a fire and then he makes his way to the fire exit, opens the door and is like, fire! And then like runs out real quick, right?
Yeah. First he probably started the fire.
Yeah, right.
And then he runs out the emergency exit, locks the door, and yells fire.
Right.
That's more likely the case. Founders Fund also hosted a capital call Thursday, which venture capital firms do to ask investors to send money to make investments in startups. Founders Fund asked portfolio companies to move funding to SVB. Then when founders realized the technical problems were delaying transfers, they implored investors to transfer money to other banks. So first they're like, bring your money here because this bank is collapsing. They probably started bringing money. He made his money. And then he's like, I'm out, guys. You should get out too. SVB. So then this just gets into the rest of the shit we've already talked about. But this Peter Thiel guy, he's a shady character to me.
And he, again, like you said, he's popped up more than once in our conversations. So
now, I talked about J.P. Morgan and how possibly J.P. Morgan could have a hand in this to make a buck off of this.
Yeah.
I didn't realize until I started looking more into Peter Thiel that he has very deep connections into J.P. Morgan as well.
Really?
Like they like partnered together for this spying software, the spying operation. They had their own version of Palantir Technologies to spy on their own employees, and this talks about, this was back in 2018. It says, J.P. Morgan Chase says an initiative conceived by J.P. Morgan Chase to use tools from data mining firm Palantir Technologies, the brainchild of Silicon Valley figure Peter Thiel, to identify insider threats quickly evolved into a surveillance scandal. So this is a couple of years ago.
Okay.
Very heavily involved in this like surveillance issue, kind of like NSA, but at the local, like the bank level. Like they're just spying on all their employees.
Right. Yeah.
Says run by Peter Cavici III, a former Secret Service agent. So now he's working with intelligence all over the place.
Yeah.
The Chase program collected data on employees, including browser histories, transcripts of calls, emails, GPS location from company smartphones, according to a report by Bloomberg. The Palantir tool combed through the data, sorting and analyzing it to provide employee behavior and flag potential abusers. After bank executives discovered the Kavichia had gone rogue, crossing privacy boundaries, and operation was spying on him, the program was yanked. No, it's when people found out that it was spying. It's not when this guy went rogue. It's like, no, it's becoming public, so we got to do this more quietly now.
Yeah.
Since the world changed when it became clear everyone could be targeted using Palantir. Nefarious ideas became trivial to implement. Everyone's a suspect, so we monitor everything. It was a pretty terrible feeling. This is by a cyber pro that worked for that Kavichi's team.
Okay.
It says, many ethical businesses are transparent with their employees about their monitoring programs, in which go to great lengths to safeguard data and collect and analyze. These organizations' data practices build trust, catch bad guys before it's too late, protect vulnerable employees against attackers, and prevent data breaches. Why am I reading this from 3 years ago? Because there's
a connection.
Very deep, like, shitty connection between J.P. Morgan Chase and Peter Thiel, who happens to be the guy that single-handedly, it seems like, tanked SVB. And now, who's going to gain the most out of this? J.P. Morgan Chase, who Peter Thiel is directly connected to.
Right.
How hard would it be for them to come to him and be like, hey, can you do this thing?
Oh, yeah, no. It's a piece of cake for him.
Right.
I mean, he seems to be kind of a tech fixer, right?
Yeah, right. And do you think a guy like Peter Thiel, in the business that he is in, would know that if I cry fire in a, like, would you think he would know, like, how people are going to respond?
Yeah.
He does know because he's collected all the data.
Yeah, that's what he does.
It's not like he's guessing. It's like, let's just do this and see how it works. It's like, no, my technology here says this person will respond this way, and these people will respond this way, and these people will sell off and pull out and do this. He knows exactly what's going to happen. So for him to do something like this was very blatantly intentional, whether it was for J.P. Morgan Chase or whether it was for his own financial interest, or whether he's working directly for the federal government, as we suspect.
I was going to say,
Who
his
knows?
connections go from tech to intelligence to government to banks. Yeah, I mean, he's got connections everywhere.
Right. So, I mean, he's something in all this. It's not, oh, I saw the writing on the walls and I pulled my money. No, this guy was an instigator.
Yeah.
He was maybe the architect of this. I don't know.
Yeah.
But somehow he is very much responsible for this.
Yes.
I don't know what it is, but this Peter Thiel guy is the conspiracy. He's at least in the middle of it.
Right.
And there's something more to this than just, well, this bank was doing bad business practices.
Yeah.
I mean, that's not this.
No, I guarantee you pretty much every bank out there, especially the big ones, have bad business practices.
Well, all of them do.
Yeah.
The small ones do because
Especially-
they're not as protected.
Exactly.
And that's the last thing I want to say is a lot of this, talking about consolidation of wealth, a lot of this, all it's going to do is increase regulations, which affects mostly the small banks.
Yeah.
Because the Dodd-Frank Act, that specifically closed out, that shut out a lot of local banks because they couldn't. There was a lot of financial obligations that went into it and a lot of stuff that they couldn't keep up with. And I got this last little thing about the Frank-Dodd Act. So if you feel like we need to regulate the banks more, and that's going to break up the big banks, it doesn't break up the big banks. It breaks up the small banks, and they just consolidate into the big banks. Because this says, talking about the Dodd-Frank Act, it says, the surge in regulation has driven a devastating impact, or has had a devastating impact. It added enormous new cost to banks, reducing lending. Economist Douglas Holtz-Eakin, who also served on the financial crisis inquiry, estimates that the Dodd-Frank regulatory siege will reduce GDP by $895 billion over the next 10 years,
Holy shit.
or about $3,346 per working person. Meanwhile, Dodd-Frank's impact on small banks, once the engine of U.S. growth, has been equally pernicious. Banking consultant Eric Grover recently wrote in the American bankers that under Dodd-Frank, new bank formation has essentially ceased. The data is shocking. From 2011 to 2014, one new commercial bank and no new savings banks were chartered. In 3 years, one bank started. One small, one new commercial bank popped up. In the 15 years before Dodd-Frank, an average of 140 new commercial banks and 15 new savings banks were chartered every year. So 15 years, 140 new banks, 15 new savings banks. After this regulation, one new bank popped up, and everything else was just consolidated into these bigger banks. It says, while small banks are going out of business at a record rate due to regulatory costs, big banks with over $50 billion in assets are now considered too big to fail.
Yeah.
So before you start saying, which I assume our listeners aren't going to say anything about federal regulation, but if you listen to somebody saying, well, what we got to do is regulate the bank, all that does is crush the small banks and make these big banks that were the fucking problem to begin with, which is why Dodd-Frank was wrote, become too big to fail. And at the end of the day, if one of them tanks again, we're paying out our ass for it.
Yeah, and that's all this is going to do, is it's going to further consolidate the wealth into, like you said, the top 3 too big to fail banks.
Yeah, and then we'll just be like funding them forever.
Yeah,
and that's probably what
But
what
all
they
the,
want at the end
all
of the
the
day.
mom and pop banks out there, I mean, they're not going to be able to hang with the regulations. They're going to have to merge into the bigger banks or sell out.
Well, if you can consolidate them into 3 banks, you can regulate them even more, because the competition's it's like you're not going to take your money elsewhere because there is no elsewhere. Or if there was an elsewhere, it's too risky. You don't want to go there. And then they can tell the banks exactly how to work. Then they can start implementing hey, you need to start sending this if $350 or more comes through. We can really start regulating that one. Because how many of the mom and pop banks are like, up yours. I'm not going to audit my freaking clientele. But these 3 big banks that have been bailed out, that are probably owned by the government, they're like, well, yeah, we got to do that. Yeah, we'll do that.
Mr. Filter, we need you to come in. We have 5 different deposits of over $50. We're not sure where they come from.
And Palantir's going to tell them that you are doing it to be a terrorist, obviously.
Yeah, right, exactly.
Because that's what Palantir is for, is to what was it say, like threat assessment and stuff like that on people. So that'll happen. They'll implement Peter Thiel's Palantir into these 3 banks, which are probably just one bank, but just by 3 different names,
owned by BlackRock.
Yeah, most likely. So that's where this heads. I mean, it's just
no place good.
No, it's total control of the financial system.
Yep.
I don't know. Like, what do you do? Pull your money out of the banks?
Yeah.
Like how do we get around something like this?
I've seen people be like, "Oh, well, you need to diversify and put your money in like 3 or 4 different banks."
The problem is those 3 or 4 different banks are probably owned by the same bank.
Well, that and the fact is, okay, so for me, that's like what, $3 here, $4. I mean, it's like, how do you spread your money out?
Oh, funny story. I've got a couple. I've got like PayPal card and a Venmo card, and I get money come from here and there. Shouldn't say this out loud. The IRS is going to come after my $50 on my Venmo account. I've got a second job that is on a prepaid card, but I have another card for that you can withdraw half of it after each shift. So it's like you're borrowing from yourself. Okay. So I got two cards for this one job with half of the money on it. Then I've got a Venmo card, and then my main bank card. So we went on a mini vacation over last week, and while we're there, we're like shopping, and my wife's like, here, you want to give me your card so I can pay? I was like, well, which one? And she's just like, I don't know. And I was like, I told her, I was like, what did I say? I was like, I've diversified my portfolio. It's like I have my portfolio diversified, like $25 on this card, $100. I felt like I was something special because I had a diversified portfolio. But yeah, that's exactly what you're saying. It's like, well, spread out your money. It's like, what, 50 cents?
Yeah, right.
$8 over there on that card? I don't know. It's like, even like people are like, invest in crypto. Well, crypto's getting overly regulated. Venmo's getting overly regulated. I see pop-ups on my PayPal. It's like, if you've got this, then make sure you file this tax thing for tax season so you don't get audited and blah, blah, blah. It's just like everything.
Wow.
All of it's regulated.
Yeah.
Like, I don't even know what this is besides hiding money under your mattress.
Yeah.
But then your mattress is going to get regulated.
Right. Yeah.
I don't know. They'll start putting GPS. Well, that's why cashless will come out of all this because you can't hide digital currency under your mattress.
Yes. Yeah.
You
And
just
that's
can't.
going to be the next shoe to drop. I'm sure of it.
Well, that's why we switched to like a bartering system, like a trade and bartering system. It's like, gain yourself a skill because money might not be an object pretty soon.
Yeah.
So you might be paying in your skills or your labor or your produce, whatever you produce.
Right.
So, yeah. I mean, I don't want to be a doom and gloom guy, but the banking system will either A, fail, or B, it'll just be taken over where they can control every aspect of your life if you have money shored up in those banking systems. So one way or another, you got to get away from that government oversight.
Yes. You just buy like gold bars, right?
Yeah. Yeah, until they start regulating the gold somehow. I don't know, but that's the most stable thing right now would be like metals and
if
stuff.
you can afford gold.
Well, then sterling silver.
Oh, okay.
It's cheap.
Yeah,
It's like
okay.
$10 for like. So in the near future, all I see out of this is the three things that I said. The snowball effect obviously is starting, I think.
Yeah.
And I wouldn't doubt if it continues, and I wouldn't doubt if it continues, but we're not told about it till it's way too big of a thing, and they're like, oh, by the way, remember we told you all these banks failed, and we're like, no, I think you said no banks were failing. Number two is the overregulation of all this stuff, like the government overregulating the banks, the finances, and everything. And number three is the ultimate consolidation of all of it into one single super bank or three super banks that are all the same super bank.
Yeah.
So, I mean, that's all I got.
No,
no happy ending here.
No.
Break yourself away from the stupid financial system. Just like we say with everything, become a little more independent, whether it's your food supply, breaking from like the big ag or the big like grocery store chains, whether it's your finances, breaking away from the big banks, communication, everything. Like, find ways to break away from being controlled.
Right.
Basically.
Self-sustaining.
Yeah, self-sustainment. We've done so many episodes on self-sustaining, so make sure you check out those. Check out all our episodes at the Break the Bell podcast. We've got like over 250 episodes sitting out there. So
we're coming up on our third year.
Yeah, check them all out. Go download all of them right now and listen to them back to back in order because it'll be a blast, and you will come across a lot of what, like we talked about, the ones where we talked about self-sustainment. We did an episode on Peter Thiel and the big tech industry and all kinds of stuff. So check us out all over Facebook and Instagram and Twitter too. You can find us at our handle, which is Break the Bell Pod. You can find links to all this stuff at our website, which is breakthebellpod.com. Do you got any final thoughts on all of this?
If you're really looking for some being cheered up, go back and watch the Biden video with the sign language lady because she is awesome.
It's hilarious.
I was laughing my ass off.
I don't think you heard a single word he said.
I did hear him, but I was really focused on her. She's good. She's really good.
I had to close my eyes to it because it was just hard to watch. This is all we've got for this one. Tell us what you think. Where do you think this heads? Do you think this just gets swept under the rug? Do you think this leads to a bigger financial crisis? Is the next 2008 or even worse in the works here?
No, but I do see the that Dodd-Frank Act again getting expanded. I see more regulation on banking, on small businesses, and again, it's going to suck.
It will suck, and it will benefit everybody but us.
Right.
It'll benefit the people in government. It'll benefit the big bankers, and everybody who has vested interest in those. But it'll hurt us the most.
Yes.
So, like I said, let us know what you think. Do you think this is an intentional push towards like a regulated, like single monetary system or like a cashless society? I don't know. There's so many venues or avenues that you could approach this, and they all lead to shitty places.
Whenever something like this happens, yes, it never turns out good for anybody.
No. So that's all we got. That's our layman's talk on banking and investment.
I felt it was fairly layman's.
Yeah, it was. I feel like we broke it down as stupidly as we are. So make sure you check us out. Like I said, all our social media. Check out our other show, which is the Two Scoops Morning Show with myself and Dan Smotz of The System Is Down. I think we're going to do one tomorrow. I'll have to hit him up, but that's the tentative plan. That's 7 a.m. on Tuesdays and Thursdays, sometimes whenever we feel like it. It's been,
Stay tuned.
Yeah, just stay tuned. We'll let you know for sure. Otherwise, come back next week for another fun-filled episode where we talk about positive things and make your heart warm and squishy inside. So
When do we do that?
Next week, maybe.
Okay.
Have a great rest of your week. We'll catch you next time.
Peace.
Goodbye.
The Break the Bell podcast is brought to you by you. So pat yourself on the back because without you, we would be talking to ourselves. A special thanks to our Patreon members, Justin Zielinski, Remzo Martinez, Stephanie Parker, and T.O. Jacobson. A shout out to our sponsors, Run Your Mouth Coffee, the On the Run podcast, and Goulash Media. If you'd like to help support us, visit patreon.com/breakthebell or buy our garbage at breakthebell.bigcartel.com. Get back here next week and let us continue to invade your ear holes. And as always, never stop talking.